Start recording. Here we go. Right. I think for this, maybe what we do is there's 100 pepperstone. Bring out the pepperstone and yeah, it's a clean shot. Right. Once we had Friday put in a high here, I think we'll just have to run through Friday's PA. I always start the day with what the daily candle looks like. Friday failed to close above the red. What's the draw? The candle that failed to close above. So Friday's low is on the menu, right? And yesterday, which was Monday, failed to close below Friday's low. Today's low looks like it's about to fail to close below yesterday's low. The draw will be yesterday's high, which is what we wanted, right? So that's one confluence for why I wanted yesterday's high taken today, ideally. Make sense? Any questions around that? Simple enough logic, willingness. Yes, no? Some of the newer guys here. You can type it out in the chat.
Yep.
Yeah, all right, cool. Okay. Let's hop on to a 4 hour. Same logic. We'll get rid of we'll keep this high on. We'll take out this and this, or yeah, take out that and that. We'll keep yesterday's high on, right? Because that's a draw on liquidity. Let's look at an H4. Yesterday, when we failed to close above here, what's the draw? All the way down there. Now, these are where trade ideas start to form, right? That's 81 points. And the same ideas go for when we failed here. We'll draw there. And I want to draw your attention to why I also wanted the 9:42 a.m. New York low taken out, and just in terms of an H4, and then I'll drill down to the lower time frames and you'll see it much better. Look here. Failed to close above this high. Where do we draw? Down to that low. Right there. Right, I'm just going to make that blue. Now, let's drill down to the slightly lower time frames. And it's going to be the same logic that you saw on that H4, where the last H4 candle failed to close below the low to the left of it. I think my internet's a bit slow today, just give me a second. Right, you see the last H4, the 10 a.m. 4-hour candle right here, failed to close below that low of the 6 a.m. candle. Where would the algo draw to? The high right there, right? Put that in red. Let's get rid of that. So now we have two red draws which are untapped, so to speak. When we use DR logic on H1, there's the high right here. There's your implied dealing range candle to the left whose liquidity has not been taken. Candle that takes the liquidity right there, right? 3 candles making the DR. From the high, candle to the left whose liquidity has not been taken, this guy right here. Candle that takes it, this guy, it makes this the smallest H1 DR we can find. Now, when you pair that with high probability failure swings inside here, we would firstly, when we target any lows, right, we are always looking for those lows like this whose wicks do not form part of the rejection block at the lows, right? These are the lowest hanging fruit objectives when you are targeting anything. So up here, I know guys like to go for actual lows like here and here, but if you just dial it down just a bit and target those failure swing lows like you see right here, you'll see a higher hit rate, right? Now, for the DR logic, it's slightly different because ordinarily you won't target any wick or wicks inside a rejection block, right? We won't target anything inside there. We're looking for lowest hanging fruits, any wick or wick highs outside of the rejection block. That puts this guy right here as a possible high probability failure swing. And with DR logic specifically, and this may be too precise, right? So I'm not going to hold out for it, but if it happens, that would be good. The candle that creates the DR, which is this guy right here, the 10 a.m. H1 candle from Friday, that high also comes in the menu, right? High probability failure swing. Now, at this point, Sunday and Monday, I was targeting this guy right here and this guy right here, right? Also, you can see that the mean threshold is unmitigated. We have equal highs up here. And today, I actually wanted this push up inside here to start pushing towards these high probability failure swings. And the whole idea here is if this structure is now bearish, meaning we had a push down, created a bearish dealing range, there's your original push. Price starts to now go into a distribution phase, right? Sideways. And you remember me, I had an infographic in the Discord somewhere. Let me see if I can pull it up really quickly. And I gave you, copy image, I gave you something like this, right? I gave you something like this. My Elliott Wave guys who've been with me for years, they fully understand all of this, right? Normal, up, down, up, highs and lows are equal. That's your regular. And expanding would take the low and then take the high. The red arrows are the direction of current order flow. Here you would get a contracting version inside here. We don't go towards the low, we don't go towards the high, we break down. And here you have even more weakness where we take the low and then fail to close higher, giving you this drifting sideways pattern, and then we go lower, right? So those are some of the fractals that price will tend to do when it's in these accumulation or distribution phases. In this case, something like this, something like this, and we're looking for something like this, right? There's an alternate to it, which ends up looking like a zoom or gives you a turtle soup. And that ends up looking like we come down here, we put in this, we put in a higher low, we run this high right here, turtle soup it, and then we continue, right? So that would tend to look like zoom, and this would be your OLR or your turtle soup coming inside there, right? Those are just two of my favorite ways of playing any of these fractals, because when you do this long enough, you're going to come to a point where you want to see turtle soups or OLRs happening before you do anything, right? Very important concept. You want to see an OLR or a turtle soup happening before you actually make a decision or get into the market, right? Now, this right here could have went two ways. It could have been, even though I wanted these high probability failure swings up here, when this started to push lower and then we broke through these lows right here, I said if this starts to push more, this ends up being that contracting form of the fractal, and then this just falls off a cliff, right? Earlier in the day, I mentioned that after ANN's bias came out, that we would be looking or not looking for price to close below midnight New York because ANN was bullish, right? Keep that midnight New York level there for now. Now, what's happening right here is when we drill down into the even lower time frames, Asia opens up and I see this fractal right here. I go long right here, and you should start being able to see these happen right here. That's a long. I held it here, held through this, and I closed it up here, right? There was a short opportunity inside here. I think one of the guys took it, and the next setup I took something inside here, and I didn't take any more. I think I may have taken one just about here. That was it for the day, right? Now when I started to see this happening, first of all, this was supposed to have been the setup at this point right here. I drew out this range right here before any of this price action happened. We marked out, I think it was this OB range right here, and I think we had an imbalance that looked something like that, right? Something like that. Could have been on an M15. Let's just take a look quickly. M15, right? There you go. Right there. So we had an OB range, M15, just so it looks a bit neater, and the imbalance inside the OB range. And on the M5, I wanted to see, let me just get back to the chat there really quickly before I do anything else. Chat, right. I wanted to see this push down here because this started to present the model inside here, right? Started to present the model inside here. I wanted to see that happen. Why this specifically? I changed it from there to this afterwards. Right? I changed it to there. And I think the next move up I had was towards yesterday's daily high. So that's what I posted in the Discord, right? This powered through here. Again, turtle soup down here, right? Or OLR. And you see how it creates or generates the liquidity inside here. OLR, run up higher. Now, this area right here, where we came or pushed into, right? I think I had something on the H1. I'll just go back and check my charts. Could have been M. Let's have a look here, right? M15. Because I took my short position before the market even opened. Just bear with me, guys. Having some internet issues. Come on. We'll just wait for my computer to crank itself up. feel free to talk about your day while this happens. Still recording there. Just give me a second. Was your Asia entry of the M1? Yeah, probably M1 or M3. TCS. Probably of the M1 or M3. Just having some technical difficulties at the moment. Just give me a second.
Lo tomamos filmar del tiempo y color.
Sí, porque si no va a quedar como
Right, there we go.
Pues,
This is M15. Where's the New York Open? 10:15. Somewhere in there. Right. So the range was then based. I'm going to take. Let's take this off for now. The range was based off of this, right? At this point. So when price started to push into this imbalance right here, and we were in premium right there, I shorted this push up right here into this range. Why? We ran the high into an area of interest, a point of interest here to the left. We ran the low. More importantly, we closed below the lows of down candles. Imbalance in the range, trade the imbalance. As this pushed up towards 50%, I shorted this candle right here. Right? I'm just going to put a put one of these on. And then the shit show started to happen, right? This was now there, right? Let's just do this now. And you had a whole lot of, if you want an M5 or M1, they weren't many opportunities for you to enter because there's a lot of shit that happened inside here, and a lot of you got stopped out, right? Especially if you were playing around on the lower time frames like this. There wouldn't have been much for you to work with unless you went really low, and even then all of this looks ugly, right? There was just this little tiny bit here that could have helped you out. Bear in mind, I'm already short from up here, right? So my invalidation is here. Market opens 9:30 here, and we get all sorts of wicks happening and going on inside here. Price pushes back up, not random, into 50% of this level, of this OB range right here. This would have been your ideal entry right here. Does that look clear in hindsight for you guys? I know a lot of you entered somewhere here and then got stopped out on that spike up. And then we pushed down towards the area we had already marked, which was here. And more importantly, we had a level. Where did that level go now? Midnight New York. Still there? Yeah, it's still there. Let's just make it a bit bigger. M5. Right. And I told you, if ANN is bullish today, then I want to see a sell side run and then a push up into these high probability failure swings. We tapped into this level, but notice how we didn't mitigate the 50% of this order block on this move here before we moved away. When you see that happen and you see lows being put in like this, this should ring alarm bells because this becomes liquidity, right? This is why I wanted to see this specific area being run to that takes this out, which ends up being inducement liquidity because we move off the lows, right? We go sideways, we move off the lows like this, and then we start to push higher. but the 50% of this order block right here was not tapped on this move here. Now you got people entering on breakouts here, entering on breakouts here, trailing their stops to here first, and then suddenly you get that. Why? This initial level was a level of inducement to engineer liquidity and start to get people to move their stops up as price starts to move, right? So this, for me, is one of the very first concepts that I learned and taught. It's looking for inducement liquidity. Levels that, quote unquote, miss the area that you want and then start to move away from you. This should also ring alarm bells here, right? It's inducement. They induce you to start entering on a breakout here, thinking that price is going to leave without you. You're going to miss the train. You then start to scramble, and then every step of the way you start to trail your stop as price moves higher, and then they do something like that. Exactly what you saw here, right? So longs were based here, inside here, and I shorted here, right, before the market opened, and held this through and closed it. Believe it or not, let's just find that FUB level really quickly, and why I closed. It wasn't that. I think it was this guy right here. There, right? This tiny little run up where we put in a down candle, we run up, and then we start to break down. I flip from the high to the low, 2 standard deviations, puts me right in this block, right there, below this low. At 2 standard deviations, I close this position because most of you know that at 9:30 market open, I close up shop and I'm actually driving home, right? So I close that short position right here. What happens next? You can take a look. Price starts to push up, right? Now, this, a lot of you would think or look at this being a full-on reversal. Why? We took this level right here, we took this low into the level that we wanted, and price started to push away heavily. There was news at 10 as well, right? Which caused it to push higher up. But I'm not looking at this with those eyes. I'm not. And the pure reason behind that is you don't just buy the level because price is at your level, right? I always, and it's like a thing of paranoia with me now. I want to see structure form around the level, or ideally a 3-bar swing low inside here, which is a mini sort of zoom. I want to see those form at the level before I can confidently take something here. One of the guys, I think it was KX42, showed me a 15-second zoom model. That means nothing to me. If I don't see something on M3, M5, or something higher, where we actually put structure in, there's your initial push. I wanted the news to run this low right here. Then I'll be ready to take it towards the high probability failure swings. This came in at, well, on this M5 candle was 945. The actual M1 candle was 942. So in the Discord, you would see me say, I want them to run that 942 low because V-shaped reversals like this are suspect. I can't ever trust a V-shaped reversal even if it starts to push higher like this. Why? Because if they haven't given me an OLR at the low like this and then start to push up, there's always the likelihood that as this starts to push up out of fucking nowhere, it may be a 12 a.m. delivery or 13:24, you'll just see something happen like this. An OLR out the blue. Why? Because they didn't do it here. If they didn't do it here, at some point, this is going to show itself. So as this started to push up inside here, I'm driving and I purely eyeballed this level based on the opening price, and this is where I took my short position right here on this wick here. In validations, if we start to close above these highs here, I think it was about 15 points, right? Because I'm holding out for the 9:42 a.m. low where I want to long. Below midnight New York, I want to see them put in proper structure inside here, or I want to see them run this low, which gives me the OLR. Then I'll take anything on the M1 or lower time frame to run back up, right? So this meanders on for a bit. We see that. We see all sorts of things happen inside here. Right? Now start to watch what's going on here. It runs above my entry here, but we aren't closing above these highs. We close below here. Now, most of you who are not on an M1 or lower time frame, this is where your entry is going to form, right? You have a flash model showing itself up for work right there. MSS, right? A flash model showing itself up for work right there. Your job would be to mark this level from here to here. Why? It's the flash model. What is the flash model? In the absence of an OLR, visible OLR inside here, it would be that, right? Once we close below here, anything that retrace into this middle leg or series of up candles inside here, you would short that. Tiny volume imbalances inside the range, you can find it here, and a tiny little FEG there. So if you were to take any positions, your positions would ideally be at the 50% or that imbalance inside there, because we've already now begun to close below here, right? See that? Does that make sense? I know that seeing it real time is much more difficult. I get that. But you have to keep your eye on the ball here. When we close below the lows of down candles, or up candles in this case here, it's showing you willingness to go lower. Your job is to sell retracements. From this point right here, order flow is now bearish. Forget what happened inside here. On an M1, you would be fooled into thinking there was a market structure shift here and this is now starting to head higher. But we don't trust that, because this came into a level of nowhere, nothingness for me. So anything that it does inside here, I'm not interested in until we OLR the 942 low below midnight New York. So for me, this is the structure. Forget everything that happened up, down, up, down, up, down inside here. This is bearish order flow. Lower lows, lower highs. Let's see it do its thing. Right? And again, we get that 942 low, or 945 in this case. It gets run. Does it mean that I am going to just start buying blindly? Fuck, no. I only want this low run. It does it right here. Does it mean that I just buy this blindly? No. Look at that. It was at this point that I was thinking that this may just fall off a cliff and start heading much lower. Take a step back. Look at a higher time frame. Look at M5. We've now run Tuesday's low, and I think even Sunday's low in this case, right? We've run Sunday's low right here. And again, Notice on the way down, when they put the structure in, like this is your structure. Are they trading above the highs of up candles? Can you see it? Are they? No. Even if they were in these cases right here, all of these are in the middle of nowhere for you to even consider anything until that 945 low was run. Now that we've run it, what are we looking out for? Turtle soup. There you go. They close above this high right here to the left. What am I doing? I think RB bought a retracement inside here. I'm just doing this. Right? That's your range. I could refine it down to bodies, body to body. And all I'm interested in is there's a tiny imbalance inside my range. I'll take it from this high to the start of the FEG, drag it across, do it there. I want to buy any retracements back into here. Why? Is this not zoom? Yes? No? Some of you saw it. I know Abi definitely saw this zoom show up. So when you see the zoom show up after a long rejection wick like this, any retracements back into the order block, you slam that buy button. Do we get it? As this happened, there you go. I'm in. We push higher. I think at this point it comes down just a little bit back inside here. Yes, it does. And then I think right here, I was on a lower time frame, right? I don't want to show it to you guys, but I was on a lower time frame. A flash model appeared right here. I then added, and I think Big Lee was talking at the time, and I said, I added here, original position here, I added here. Why? And is bullish today. We want those daily and H1 levels hit. Yesterday's high, H4 highs, high probability failure swings. I want all of those knocked out. Also, we've run the 945 low here. We've OLR'd it. We're rejecting at the lows. Wick fractal here. Watch. Wick fractal right here. Again, there's a low. Let's get rid of this guy and this guy for now. And this. Here's a low. Failed to close below it. Right there. Where's the draw? All the way up here. Make him bigger. Put him in red as well. When you take this entry right here, you are looking for this guy right here. Purely based on the concept of willingness. Because when we wick above old highs, that means price is going lower. When we close above old highs, or highs to the left of us, that means price is going higher. When we wick below lows, price is going higher. When we close below lows, price will go lower, right? H1, wick fractal.
Ne yaptırdınız bu adama, ben bilmiyorum ki ya.
We don't close below this low right here.
Gerçekten
We wick
görecek
it
bu
right
açılmış
here.
olduğunu.
The draw will automatically become that 12 a.m. candle high, right? Whether you took an M1 entry, whatever it is, this is where we stand right now. Were there other opportunities? Of course there were. There was inside here. You could have bought this. We close above here. You could have bought this. So technically, you could have bought this. You could have bought this. You could have bought this. You could have bought that. Where are we headed, or where are we currently?
Ya balık tercih ederse balık
Close
var.
above here.
bilmiyorum
You could
ya.
have bought this. You're starting to see it. Move it up there. Close above there. Buy this retracement.
Ne?
Let's just see where we go to. There. So notice how we took the high of that H1 candle that we had a draw on. See that? That's not random. That candle right here failed to close below this low here. This candle right here, the 1 o'clock candle, we had an OLR. The high of this candle becomes something that we will look to target.
Ben de teşvik olsun diye yapıyorum. Mecburen etken
I'm
etken
just going to
sıkılıyor
mute
insan.
someone here. Let me see who this is. Could be Lex.
Olur.
Or is it...
Hı -hı.
I'll just mute you. And mute you. So, how many points was that? From here to here, 67 points. For some of you, that may be your entire day. For some of you, that may be more than your entire day. But enough to end your week. Yeah, some of you, it may be enough to end your week. I know some of the guys inside here, 15 to 20 points is enough for them. Abi told me multiple 15-point trades for him would be enough. I mean, he literally took a trade from here to above here. And that was his day. Or that was his trade. 15 points. So let's get back to where we currently are. This is where we stand right now. Remove all the fluff. The draw, Ann is not wrong. Even though Ann was bullish, I keep telling you guys, I did mute a second. Second is muted. I can't hear him anymore. I did tell you guys, you go with what prints on that day. Go with what prints. Ann will give you the probability, and most of the time, in fact, the actual data is more than 75% of the time, Ann will be right. Ann will be right, 75% of the time. So now we find ourselves, like I said, we've overlord the previous all-time high on Friday. We're stuck in this range here. What is Ann? Ann is AI technology from Synapse Tech. It's a paid, I can't even call it an indicator, it's a paid service on Telegram. And they will give you the bias of almost all the pairs that are tradable daily, 1 hour before the market opens, right? Bullish or bearish. And a bullish bias basically means that at 4 p.m. or market close, if it's bullish, it expects price to be above midnight New York. If it's bearish, it means it expects price to be below midnight New York, right? So what's left? Yesterday's high, a high probability failure swing above it, and this guy right here, which is, it may be reaching, it may just be reaching, but I wouldn't be surprised if we get that move there, right? So just watch out for it. Because
Very
this...
quick question.
Yes, sir.
What is Ann?
What is Ann? Who's talking there?
I'll be here.
Abhi. So Ann is an AI service that has back-tested like 15 or 20 years worth of data, and every day it will give you a percentage confidence rating on whether a particular asset is bullish or bearish for that day. So if it's bullish...
Is that integrated into our Discord? Is
No,
that
it's
right?
not. It's a separate paid service. But
Okay.
you lucky bastards get it from me anyway, which shouldn't be made public knowledge. So you'd find me telling you around an hour or half an hour before the market opens, and is bullish today. Well, I do that every day. Or and is bearish today. So that sort of, if you had a particular bias, and Ann is the opposite side of it, then you tend to change a few things up, right? Change a few things up. So if you're bullish, you want to see a sell side run. If you're bearish, you want to see a buy side run. Ann was bullish today, meaning it expects price to close above midnight New York by close at 4 p.m. News can affect it. News can skew the data, but all in all, 75% accuracy so far on NAS in particular. So this puts us in a weird place with NAS right here. We've overallowed the high, and it's starting to look like that low risk entry of a market maker sell model, right? The low risk entry, first stage of distribution, and then you probably get a second stage of distribution here until we get to the target. What could the target possibly be if this is bearish? Mind you, I'm not a fan of too much of this sideways, because too much of sideways after we've taken a high could be accumulation to go higher, right? So we can't rule that out. And on a monthly, we find that this monthly candle, if we look at it, hardly has any wick on it. Tiniest of wicks. We've taken the previous all-time high, and generally what you want to see is, as price takes a previous high, it generally goes into some sort of accumulation back towards the high, and then we continue. So if for the next quarter it wants to do something like that, I wouldn't mind it. 4 straight months of up only so far. So depending where we close this month will affect where we expect price to go. There's a down candle range right here on the monthly with imbalance inside here. On the daily, where we bounce from is the business is not fully completed there. Why? We may have reacted off of it from the expo call. You would recall this volume imbalance right here. We may have reacted off of it, but this does not get balanced until they print an actual down candle body inside here, which they haven't. Wicks don't make this efficient. They need to print an actual physical down candle body on a daily inside here. The only thing I don't like about this, like I didn't like about here, is that the highest candle is a down candle, and down candle generally indicates bullish delivery, right? So we got to watch out for if they start to push up, will they want to wick this here and then move, or leave it as is for later on, because we're starting to see a 3-bar swing high form here on a daily. The middle one is the longest and 2 lower ones on either side of it, right? Which generally I would fade the 4th candle. As the 3rd candle closes, I'd fade this 4th candle and look for any efficiencies in the range like that and send price down. But this is not ready yet. So low risk entry vibes. Overall, still bullish. You can't be too bearish. This may just be minor retracement and then we head higher, right? It's been in that phase. We want to see, if you want to get bearish, you're gonna have to draw a literal line on your chart like this and see it actually move from a buy side of the curve to a sell side of the curve. Right? Right now it's not doing that. Very, very early signs. That's why I said on a daily or H1, it's starting to look like more like a distribution and a low risk entry, but I want to see what happens at yesterday's high, which could be a Wednesday high of the week. There may be, I think there's news tomorrow. And these 2 high probability failure swings right here. Where did this... So there's all these times Kish gave 1036 EST. Is that 1036 EST or 1136 124 or is it 224? Right. So what you're asking me there, BB, is basically 84-minute cycles. And for me on UTC -5, it would be 1136 and 224. If I am on UTC -6, it would be 1036 and 12 o'clock and 1324, right? That 84-minute cycle is linked to UTC -6, not UTC -5. Right, so we are in an interesting place or territory right here where this may give you a short opportunity that some of you may not have seen before. If we get this high probability failure swing and the model shows up and we start to sell off, expect this to get taken out. Expect all of these to get taken out. All of these, all levels, even on a weekly, that have not come back into a previous range of consolidation after we've broken above it. All of these, right? It comes into here.
Do you expect the close of the month to still be a strong finish and then have the sell-off? Because usually end of month is when the books and whatever.
So we've got 2 days left, right? Because it's 29 days in Feb. And tomorrow I want to see them, especially tomorrow, I want to see them close below the high of the previous monthly candle, right? Where does that put us? How far? Let's make it another color since all of these are pretty messed up. We'll make it orange. So that's pretty wild right now, if you think about it. But it can happen. It can happen. All we need to do is push up here like this. It gives you this structure like this. We turtle soup there, which is what we expect here. Turtle soup. Sell off. Turtle soup. sell-off. That will get me more in the mood to see lower prices, right? Gotta let them show their hand. All of this, it's fucked up. This sideways, in fact, this is an even more fucked up version of that sideways pattern, because the middle leg, so we get a 1, 2, 3. Here the middle leg has subdivided into something even more complex, and only, I think right now only Slot will understand this, where it pushes up here, the middle leg does another zigzag like this, and then the third leg does that.
But that could also be the same as your variation to the flash model, right? Like it could be an inducement for the longs.
When I see shit like this is what I see. Right there. There's liquidity resting above these highs. So if you're looking at it in terms of an inducement model, it's this, right? I think I mentioned early this morning, even if they wanted to push this from here down lower and then come back up, I wouldn't mind it. But they're doing this. Take these, mitigate 50%, then push lower. That's fine with me. There's your trend line liquidity right here. See that? Slight variations. Did most of this make sense today, or what I've spoken about? Everyone's silent. None of it made sense.
It was very clear.
We're not, you got to be fluid enough to understand what the fuck's going on here, and when to like, you need to be able to flip that bias or that switch on the drop of a coin. Real time is the hard part here. Real time is always the hard part. And do what Saba did, right? There's an indicator, and all it does is shows you what the current order flow is. What's this order flow right here that I've drawn? Is it glaringly obvious? Bullish, correct. What's this order flow?
Indian structure, and then bearish.
This is bearish here, right? Bearish on the way down. If you wanted to subdivide that, you could have went there, 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 there. Forget the ups and downs inside here. This. But now that we've started to close, this is why I say, look back. Just look back. What is structure doing? Are we closing, if you want to be bullish, are we closing above the highs of down candles like that? Why? When we close above the high of a down candle that's to the left of us, that's CSD and MSS, right? That's the model. Then you buy retracements to head higher. If you are bearish, like here, you want to close below the lows of down candles. That's confirmation. So if you are able to identify substructure, which is this, and structure, which is one time frame higher, which is that, forget what happened inside here. This is how you would do it. Now I don't expect you to do that on an M1 or M15 second. The order flow indicator, I'll find it for you. It's something very simple. It's like MSS. Could be this one. Could be this one. Let's have a look. No, it's not this one. Saba is usually, yeah, there we go. I think it's this one. See this? I'm just gonna do this for a second. There you go. This will print what I've been drawing with these arrows, basically. What I've been doing here for you like this. This is printing for you real time. Look at it. And I presume on a lower time frame it would print more. See here?
Could you share this when you get a chance later?
Yeah, let me just have a look at what this actually is, right? Because I keep forgetting it. Settings. What is this called? Fuck. About the script. It's called market structure, break, and order flow by. I'm just going to copy that and paste that in the war room. There, right? Look for that one. No problem, Sloth. I'll catch you in a bit. So, I mean, you can turn off the MSB here if you don't want it. You can turn it off. But can you see where I'm getting at? You can see the flash here. Retracement here. This is a flash with inducement. We take that level. We start to push lower. So, play around with this. It may help you guys. Especially you, Joe. If you're having trouble identifying structure. After many hours of screen time, I don't need that indicator, right? Because eyes get trained. I don't look at candles just as candles. I'm looking at them as what they actually did. Because when you figure out or realize that these two candles right here, or 3-4 candles, it opened, it went lower, it went higher, it came down, it went higher, it came down, it came down, it went higher, it came down. That's what it did, structurally. That's how my eyes have been trained to see what these are doing. It's not just a wick and a wick and a wick, or a body and a wick. So we started off using a daily, using a 4-hour, using an H1. Find, like we did here, find what you think the current drawn liquidity could be or should be. On this day, we failed here. We draw here, we close here, we want to draw up there. We fail here, we draw down here. We fail here, we draw back up there. Use that on a daily, use it on a H4, use it on a H1. It's all over. You could frame ideas all over the show based purely on this. It would draw here. Some of you, 15 points are enough. This is 50. Find the idea of willingness, frame the draw. Any questions you guys have before we shut down for today? What's in the chat? Let's have a look. Thanks, gotta hop off. Yeah, no problem. Thanks, Expo, for sharing that. Right, so I've given you the expectations on NAS. the draws, what we're looking at and where we're looking to head. And then tomorrow onwards, we'll just refine each and every one of those as the price prints. As the price prints. Not sure if I want to hold this long. I may just close it now and see what happens tomorrow. But is there any news tomorrow? Do we know for sure? I can't check right now. I think there is. I think I remember seeing something on Wednesday.
Yes, there's news tomorrow.
Yeah, okay. So time that with the possible Wednesday high of the week. Because generally those highs and lows would be sorry, I'm just closing these positions now because I value my sleep.
There's actually a lot more news on Thursday, though.
Yeah.
Thursday's gonna be a banger.
Right, so that's good. Let Wednesday start to move and Thursday finish it off. Let Thursday, if it's bearish, ruin everything. We're just going to worry about what Wednesday does tomorrow. As long as they get to where we want them to, which is here, and they do something that we like, we'll take it. We'll take it. Right, let me upload this to YouTube for you guys, and I will post it in the streams channel. I think tomorrow I have a couple of 1v1s, but I need to start finishing off the course videos as well, because there's still some misunderstanding on MSS, how to identify it using FEGs, without FEGs. So I'll start to clarify all of that tomorrow. Right. Thanks, boys. I'll catch you in the Discord.
Thanks. Have a great evening.